Good morning, ladies and gentlemen. This is Brian Dewhurst with Uncommon Wealth Partners, bringing you your market update and Bitcoin briefing. It is a beautiful spring day out. The birds are chirping. The markets are up. What more could you want on an April morning? There's a little bit of crisp chill in the air. I'm excited. Let's get into the video today. Look at that. Everything is up from the beginning of the year. S&P 15.9, NASDAQ up 20.2, Dow up 13.1, gold up 0.52, Bitcoin rallying off the lows of the last year, 36.13. So let's dive into the charts. This is the daily S&P 500 view, and you can kind of see up here we're moving to the right and up. I got those red lines in there to show you the support and resistance. So the S&P is trying to break through all-time new highs, trying to beat that 2940 over here. So chart looks healthy. On the daily, want to show you the weekly. Now you kind of get a zoomed out view. You see our short-term moving average came above the 21-day. So that's like the 8-day, the 21-day. And then we're blue candles up here. We're all teal bars down here. Green dots meaning go. So big, huge rebound out of Christmas. We're still going. And you can kind of see here is the first top, and then the second top, and now the third top. So we're going to see if we can break out of this box to the upside, which is what it appears it wants to do. But we're just going to take it one day at a time, 1 month at a time. That's all we do here. And the next thing is the monthly view. Now you see is zoomed out on the S&P 500 for the last 20 years. Down here is really bullish. We've got a squeeze, which means there's a lot of pressure building up. And our kind of momentum indicator, whatever you want to call it, basically went teal. So showing that there is potential more upside in the market. And you see that trading zone now over kind of a multi-year period that we've been in, up, down, up, down, up. And so now we're waiting to see if we're going to break up to new highs or if we'll retest resistance down towards 2,600. But definitely looking bullish. This is kind of another chart, and I've showed you in the past. We want to see kind of a nice gap between the green and the red lines. That's the way we kind of build this chart, and we're seeing that recovery with the price on top, then the green lines, then the gap, then the red lines fanned out. So that looks really healthy. That's a monthly view, so very long term. And our indicator on this one does the candles a little bit differently. You see the trading range again. This is a monthly view, and we've gone to a green candle. As you see, we're trying to break out to new all-time highs. So again, everything looking pretty bullish for the S&P 500 and thus the domestic markets. International has been strong. Oil's been strong. REITs have been strong. Everything's really been strong out of basically December 24th was the low of 2018. So we've been straight up from there. This is gold. Gold kind of languished with the pull down in interest rates and the stock market going up. So gold is kind of pulling down and just kind of chilling sideways. And then this is Bitcoin on the daily chart. So a little bit more zoomed in. And you can kind of see this just cavern of death in here that Bitcoin's been in. Just fell off a cliff. Looks like the Grand Canyon. And so you just see this basing, and then we got this big shoot up here. So we'll see if Bitcoin can kind of like build new highs. It needs to get above, this ledge here, over here, and should create somewhat of like a bowl or something. If we're going to come out of this, it needs to set new support, not only above 5,000, but above 6,000 and then 7,000 and kind of staircase our way out of this languishing period. So got some more to talk about. In terms of Bitcoin and gold and currency, we are working on a new ebook focused on gold and money. Gold, I think, is one of the most misunderstood asset classes in the world. I do believe that gold is God's money and was ordained in the Bible as money and in Genesis, and really has been money, currency. I do think money and currency are different. Currency is typically fiat or debt-based currency. Gold is an asset-based currency because you have to dig it out of the ground. You have to spend money to go get it. You have to spend money to refine it. You have to spend money to ship it. It has an intrinsic value. It's really unlike anything else in the world and is the purest form of money. This $20 bill here, you can kind of see here is a note, which is debt. All dollars are debt. And what this is basically saying is back in 1932, $20 was a gold coin or an ounce of gold. And now we don't have a gold standard, but we do have this $20 bill. Trivial note, anyways, that is Alexander Hamilton. Most people don't know who that is on the $20 bill. And then what does a gold coin, and if you had a $20 bill basically in 1932 versus a gold coin in 1932, that gold coin today, what this chart is saying, could buy approximately, given the value of when this was done, about 482 gallons of gas, 427 gallons of milk, 675 dozen eggs, 2,700 first-class stamps, versus a $20 bill in today's economy would only get you 7 gallons of gas, 6.3 gallons of milk, 10 dozen eggs, 40 first-class stamps, because that $20 coin in 1932 is actually one physical ounce of gold. And today, one physical ounce of gold is about $1,285 an ounce. So that gold coin is worth $1,285, and your $20 bill is still only $20. So inflation is what we're trying to show you. And we're going to start talking a lot more about inflation. And it has a big reason why we started the Uncommon Life podcast and talking about the 7 sources of residual income and the power of owning assets that produce cash flow. That could be real estate, business, can be investments, those different things. But you can kind of see here the power of gold. And now in this other chart, 1 gram of gold in 1971 would have bought you, 5 loaves of bread. So for everyone listening, because a lot of people don't know this, an ounce of gold is made up of about 30 and a half to 31 grams of gold. And so that is 1 gram of gold. 30 and a half of those grams make up 1 ounce, which is this coin. And what it's saying now, $1 in 1971 would have bought you 4 loaves of bread. And now in today's value of gold, it could buy you, however many that is, was that 20 loaves of bread? And $1, buys you a few slices of bread, depending on the quality of bread that you want to buy. It's probably more than 2 slices, but it's probably certainly not a loaf. So that's showing you the power, the purchasing power of gold over time. And that purchasing power and that wealth effect, gold has exuded for over 5,000 years in pretty much every documented civilization known to man, from Russia to China, United States, Canada, South America. That's kind of an update on gold. We're going to have a lot more on gold and the history of gold and money and currency and what the difference is. And so more to come on that. Next chart, I want to talk about the markets. Real briefly, this is kind of a cool chart I found on Twitter from the Fred. Fred is the economic data and repository database that you can run numbers from the Federal Reserve. It's based out of St. Louis. And this is basically just showing food and services drinking in California, New York, Denver, Massachusetts, and Texas. And you can kind of see the percent change from year over year in terms of just all employees and revenue. And you can see when this chart gets negative, there's a recession. These gray bars are recessions. And so what it's saying is, what it's trying to show is that as the food and retail and services industry shrinks into a recession, it is a predictor of the recession, and then it bottoms out, comes back out. And so we saw that in 2000 to 2003. That was a recession, tech wreck. And then here, 2008 to 2010, we see a very negative for food and services and drinking. And that was a big recession, as we know, probably depression, actually. And now we're seeing food and retail, food and drinks, going negative as well. And will that cause a recession? So a lot of this data is negative and not positive. And I'm going to show you one more chart. This is from a guy I follow on Twitter. His handle is Occupy Wisdom. Good stuff. A lot on gold too. He is showing the differential between SPX, which is S&P 500, which we showed you to start the video, and lumber prices, which are typically a leading economic indicator because it's used for new construction, new homes, and those are typically leading indicators. And so we're still seeing the price of lumber languishing. Had a little spike and then it's come back down, but yet we see the S&P 500 continuing to new highs. And so when we look at leading economic indicators, and a lot of the economic indicators out of China have been pretty bad, but they're starting to turn. The big theme, and I wanted to show you a bullish chart because I feel like I don't want to be like a Perma-Bear or anything like that. But this is actually a chart from Fidelity Investments, and it's basically averaging. The teal line is an average of the 1994 to 1998 and 2011 stock markets as they melted up higher after a big correction. And so, the black line is basically the market falling down, bottomed here December 24, 26, right at Christmas. And then we've basically been straight up ever since. And as you see this kind of squared off corner, that's the all-time high of the S&P 500 that we're trying to break through. So really good charts here. And I just wanted to show you the bull case as well. But I think a lot of this market activity is from the Federal Reserve and the liquidity being injected in not only our system. Mortgage rates have come down aggressively in the last 2 months to sub 4% on the 30-year fixed again. And China is printing money like crazy. Their debt load since 2008, I think, is up like 5 to 7 times as a country and as consumers. So debt is fueling a lot of this, which is not good for the long term. But in the short term, we have to be open to higher prices. And so that's the importance of having a financial plan. That's the importance of why we work with third-party money managers, that this is all that they do and the data sets that they look at, and why you need multiple and should have multiple sources of income. And a big reason why we do the podcast, Uncommon Life Project, is to highlight different ways to make money, different income streams outside of the stock market, and why we're going to continue to talk about gold and its power as money over the long term. And so all good stuff. We're going to have more to come. Thank you for watching. Please let us know if you have questions or comments. You can find us at uncommonwealth.com. Thanks, everybody. Bye-bye.
The material in this video has no regard to the specific investment objectives, financial situations, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or an offer to buy or sell a security or any other related financial instruments. Nor should any of the content be taken as investment advice. Any of the opinions expressed in this video are subject to change without notice, and Uncommon Wealth Partners LLC is not under any obligation to update or keep current the information contained herein. Uncommon Wealth Partners LLC and its respected officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. Uncommon Wealth Partners does not accept any liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.